Hello, everyone, and thank you for joining us today. Today, we have a short webinar on housing levy, and we have a guest with us from the Kenya Revenue Authority, Mr. David Busaule, who will be showing us how to account for housing levy on the KRA iTax platform. But before we do that, just a few housekeeping rules that we'll have the Q&A session at the very end after David Busaule has taken us through the system in terms of how to account for the housing levy. If you have any questions, please feel free to share them on the chat box, and David and I will attempt to answer those questions at the end of the session. And just to let all of us know that this session will be recorded and perhaps will be shared with us after the end of the presentation. Great. So my name is Alex Kanyi. I'm a partner with Cliff Decker Hoffmeyer, and I lead the tax and exchange control practice. And our firm, Cliff Decker Hoffmeyer, is an independent law firm with its roots from South Africa. And in South Africa, together with Kenya combined, we are a full service law firm with more than 300 lawyers, spanning over 169 years. So we have a rich history in terms of providing legal services, and perhaps in Kenya, the firm started Skieti Law about 5 years ago, and it's been a good kind of working arrangement with our partners at South Africa. CDH, that's the name we go by. It's one of the largest law firms, and we are top ranked in Chambers, top ranked in Legal 500 deal makers, and IFLR. Our CEO is Brent Williams, and our chairperson is Tim Fletcher. Coming to the Kenya office, just as part of the introduction, our offices are at Merchant Square, third floor, Block D, Riverside Drive. The firm here in Kenya has 8 partners now. The ones you see on your screen today are 7 partners. We have Sami Ndolo, who is our managing partner and who specializes on corporate and commercial, banking and finance, among other things. We have Njeri Wagasha, who is also a partner in the law firm, specializing on corporate commercial mergers and acquisitions, PE and employment law. We have Shem Otanga, who specializes on intellectual property law. We have and TMT. We have Madam Bogwa, who specializes on private equity, corporate and commercial law as well, and also mergers and acquisitions. We have Clarice, who leads the environmental law team. We have Desmond Odhiambo, who leads our disputes team, dispute resolution team, and he handles that together with the employment law practice. And myself, I lead the tax practice. And of course, we have a new partner who's joined the firm to lead the real estate practice. Here in Kenya, our firm has been ranked at the Nairobi Legal Awards, first runners-up in the large law firm of the year category that happened just last year. And our partners as well here in the Kenya office are ranked by Chambers Global Legal 500, IFLR 1000 as well. Moving on, the purpose for our webinar today is just to discuss the Finance Act 2023, but we won't be focusing on all aspects of the Finance Act, as today we want to focus on the housing levy. And just to bring us to speed, We started with the finance bill, and perhaps most of you followed the debate closely when we were discussing the finance bill. It was tabled, of course, in Parliament in May. There was some stakeholder participation around the same time. Then it was assented on the 26th of June, and it takes effect in stages. Some provisions take effect on the 1st of July, others on the 1st of September, and others on the 1st of January 2024. And with the Finance Act, there are various laws that have been amended. And of course, we are all aware that at some point the Finance Act had been suspended by the High Court until recently, when the Court of Appeal lifted the orders of the High Court, meaning that the Finance Act is now fully operational. Which brings us to the Housing Levy, because Housing Levy, actually, if you look at the Finance Act 2023, it takes effect from the 1st of July. And while we were not so sure whether it begins from the 1st of July or not, I think the government is quite clear on the date for this. And we recently saw a notice that was put out with the State Department for Housing and Urban Development, where they clearly stated that the Act, or rather Housing Levy, will be collected effective 1st of July. And of course, we'll shortly discuss the rates of 1.5% for the employees' gross salary, 1.5% of the employees, the portions are 1.5% from the employer and 1.5% from the employee, making up a total of 3%. So we all know the progression of this affordable housing levy stroke contribution and the transitions that it went through right from the bill itself. So when the bill was first published, we had 3% contributions, 3% for the employer, 3% for the employees, and we had a cap of 5,000 Kenya shillings for each person. Of course, when it came to the Act, that cap was removed, so there is no longer a cap of 5,000 for the housing levy. The other thing that we saw in the bill was that after 7 years, there was a promise of a refund, and that also was coming with some form of interest for those who are ineligible to get the houses. When you come to the Act itself, so there's no refund. Also, there's no interest that the money is contributed towards housing levy. There's no interest that will accrue. So those are just some of the notable differences that we saw between the bill and the Act. Of course, there was a lot of public participation, and the public, of course, provided their comments on this. The due date for remitting the housing levy is within 9 working days after the end of the month in which payments are due. And considering that government is quite clear that the effective date is on the 1st of July, this basically means that employers, when filing their returns in August, taking account of the July salaries, they need to account for housing levy on those July salaries. And some of the questions that we have received is, what if we had already paid our salary and now we still need to account for housing levy? What do we do? And of course, we have encouraged taxpayers to ensure that they account for the housing levy for July salaries with the August returns that will be filed. And one of the reasons for this is, first, of course, government has come out clearly to say the effective date is on the 1st of July. The other reason is staying compliant and ensuring that your company remains to be compliant. And the other reason for this is that there are quite huge penalties of 2%, which will accrue if then you fail to pay the housing levy on time, which is within 9 working days. So those are just some of the things that we've seen with this housing levy. In terms of what we are also advising and asking people to do over and above the housing levy, we're encouraging taxpayers to prepare for eTIMS, electronic tax invoice management system. And of course, we've seen within the Act that if then you fail to use this particular electronic tax invoice management system and you're not exempted from it, there are huge penalties, 2 times of the amount due as per the Finance Act 2023. But even as if that is not enough, you have of course, the law saying, and together with KRA, that any invoices that then don't go through eTIMS will not be accepted as valid expenses for the business. So that's again another thing that we're asking people to watch out for. The other thing that we're asking people to watch out for is the withholding tax requirements. Initially, taxpayers would account for withholding tax within the 20th day of the following month. However, with this Finance Act, what we've seen is that you need to account for withholding tax within 5 working days. What does that mean? So it means that if today I pay a service provider, say 100 shillings, and assuming that this service provider is resident in Kenya, I then withhold 5% from this service provider, meaning I pay him 95. The 5 that I have withheld as withholding tax, I need to account for it within 5 working days. 5 working days, no longer the 20 days after in the following month. So again, why this is important is because if you don't do it, then of course you have the penalties and interest that will accrue just because of that. So it is something that we need to watch out for. We also encourage taxpayers to train or consult on sector-specific measures within the Act. There are several and many actually measures that are within the Finance Act. So we encourage you as a taxpayer to then look out for specific provisions that affect your industry. And if need be, you can consult us so that we're able to either do a training for your staff or perhaps engage so that we discuss about the impact of Finance Act on your business. The other thing that we're encouraging everyone to do is to watch out for the effective dates for various provisions. Just like as we were starting, we mentioned that Finance Act has several provisions that are coming into force in stages or in different dates, sorry. You have provisions that start from the 1st of July. You have others that start from the 1st of September 2023, and the rest coming into force from the 1st of January 2024. So knowing which provisions comes into effect when is useful so that as a business then you're able to comply. And finally, the other thing we're asking our taxpayers to do is to watch out for the progress of the court process in this particular Finance Act 2023. We started with the Act getting published, and soon after there was a petition to the High Court. And after that petition was heard by the judge then decided that provisions of the Act need to be suspended until the hearing and determination of the case against Finance Act. Of course, one of the things that the petitioners are saying is that the Finance Act is not constitutional. So, however, of course, that moved on to the Court of Appeal. And the Court of Appeal on the 28th of July, just last month, they issued a decision on suspension of the Finance Act. Note the timing, quite critical, that they were making the decision on the 28th of July, so that when the PAYE return or the opportunity to file the PAYE return opens up, which normally opens after the end of the month, then employers can actually account for taxes that would have fallen due in July, and among them, of course, would be the housing levy. Following that decision from the Court of Appeal, we understand that an appeal is being lodged or has been lodged to the Supreme Court to basically challenge the Court of Appeal's decision to lift the orders of the High Court, meaning lifting the suspension of Finance Act 2023. We'll wait to hear what the Supreme Court will decide, if at all they will admit the case and hear it. Meanwhile, the Chief Justice, Martha Koome, has appointed a 3-judge bench of the High Court to actually hear this case. And it is this 3-judge bench that will then decide on the merits of the case, including whether Finance Act 2023 is constitutional or not, and what that will mean. Of course, part of the Court of Appeal's reasoning when they were lifting the suspension was that in any case, if there were taxes that were paid and the court finds that the Finance Act is unconstitutional, then taxpayers can be refunded the monies that they paid while it was decided to be unconstitutional, quote unquote. So we'll wait also to see how that happens. And of course, we have had a lot of discussions with a lot of you taxpayers who say that getting money to KRA is very easy, but getting money out of KRA is really difficult. So we'll see what happens with that. So the two things you're watching out is, of course, what the Supreme Court will say, and of course, what the High Court will say, what that 3-judge bench of the High Court will say. And then as I finish on this particular update, as at today, the 3-judge bench declined to grant conservatory orders, meaning that the lifting of the suspension of the Finance Act will continue, meaning that the Finance Act will continue to be implemented. The court also has summoned Director General of EPRA to basically get to understand why they were standard rating VAT on fuel against the High Court orders to actually lift, to suspend the Finance Act as it were then. And of course, the other important update is that hearing of the petition at the High Court has been slated for September 13th and September 14th, which is about a month from today, so that the High Court can then decide after hearing what it will do with this particular Finance Act 2023. So with that, my name again is Alex Kanyi. I lead the tax and exchange practice here at CDH in Kenya office. Happy to interact some more on the housing levy and other things within Finance Act 2023. So I want to welcome some interim questions for now, and then our colleague David will later on pick it up in terms of trying to then explain how it works on the system. So we could pick a few questions.
Alex, we've got a Julie who's got her hand up. We've enabled her mic.
Yes, hi,
Okay.
Ale.
Hi, Julie. How are you?
I'm fine. Now, I got this notification to join in when I'm on my way home. So, might you have a write-up on the same? Because I couldn't take notes in the middle of the road. Thank you.
Okay, Julie, we have the presentation, which we'll be happy to circulate. And of course, this session is being recorded, so we'll have a chance to share that as well. Okay.
Alex, there's a question in the chat from Shadi. He's asking, is it really legal for KRA to backdate payment of housing levy?
Well, it's not KRA that have backdated the effective date for housing levy. So basically what has happened is that there was a suspension of the act. The levy, if you read the act, actually is from the 1st of July, but the High Court had suspended implementation, which suspension was later on lifted by the Court of Appeal. So to my mind is not KRA backdating the effective date. It's actually just going back to the date that was provided within the Act for the housing levy to then take force and start being implemented. Another question?
Peter Gashoka asks, if an employer has some interns in the payroll, will the AHL apply even for this category of quote-unquote employees?
The straight answer, I think, from the top of my head is that it will apply because anything that is processed through payroll, meaning you also pay tax for these particular interns, then the housing levy will also follow. KRA, I'm sure, will expect a 1.5% from what you pay them as well. You can go to the next question.
What's monthly gross salary? What monthly gross salary entails? The Employment Act has a definition for basic salary. How about benefits, bonuses, commissions, etc.? That's from Bettingari.
Wow, and that's a very good question. It's one of the debates that has been going on in terms of will housing levy also apply to a bonus, for example, or certain benefits that are given to the employee. The straight answer from the top of my head is that it will apply, but we have some form of a gray area or a lacuna, because when you look at our Employment Act, the way it defines basic salary, it says it's gross excluding allowances. It's gross excluding allowances. But now, if you look for the definition of gross salaries, you do not see that definition in the Employment Act. Neither do you see it in the Income Tax Act. So it is quite unclear as to whether 1.5% perhaps will apply to, say, number one, your basic salary plus maybe you're getting a telephone allowance, so they add it up and then you get your 1.5% applying to that. And it is one of the areas that I believe when KRA have a chance, we'll also clarify. Okay. Teresa, we could go to the next question.
Okay, this one has 3 tiers. Number one is, do I read all of them? To whom is
I
the
think
housing
we
levy?
do one by one.
Okay. To whom is the housing levy being remitted, please?
Sorry?
To whom is the housing levy being remitted?
Okay.
Number 2, are
Mhm.
there non-cash benefits that are exempted? And then his last part is the employer's contribution a benefit that is taxed on the employee? That's from Juguna.
Okay. So quickly, to whom does the money go? So according to the notice that we saw in our slide, the State Department for Housing has actually appointed KRA as the collecting agent. So to answer that question is, for now, it goes to KRA who will collect, but the presumption is they are collecting it on behalf of the State Department for Housing. So it's kind of the similar arrangement that was there with the Nairobi County administration, where Nairobi County had actually appointed KRA as a collecting agent for their fees in Nairobi. So while the ultimate beneficiary would be the Nairobi County, and in this case we are saying the ultimate beneficiary would be the State Department for Housing, KRA then is the in between to assist to just collect these monies. Whether these monies go finally to the consolidated fund at central bank, that's a different question, and it's not very clear. Initially, with the bill, and when we were calling this a contribution, there was also mention of a fund that the monies would go to, and during public participation, I think guys were arguing that don't first force us to do housing levy, but if you have to do it, then make sure that the monies actually go to central bank and are ring-fenced so that they're not used for anything else. But with the wording that we have within the Finance Act, there is actually no assurance as to whether that money goes to central bank, number one. And two, while there's mention that these monies will be used towards affordable housing and among other reasons related to housing, there are some questions around can these monies, for example, be used for something else other than housing. So we'll wait to see how that then moves from there. Are there non-cash benefits also included when you want to calculate your housing levy or the 1.5%? Again, this is a good question, and we'll wait to see how this is clarified by the Kenya Revenue Authority, because I am assuming that some of these non-cash benefits do not necessarily go through payroll, and as a result, there could be some ambiguity as to whether you still add them up. I know within iTax they have a different platform or sheet or tab for you to account for housing levy, and perhaps you have a chance to add all this, but whether they were also being considered as part of housing levy is one of the gray areas that we also expect the Kenya Revenue Authority to clarify. And final question, is the contribution that is made by the employer taxed on the employee? To my reading of the Act, no, that is not the case. So you don't kind of get taxed again on the employer's contribution for housing levy. So that would be my understanding. We could get maybe a couple more.
Alex, I think you've answered. There's a question from Malcolm Mgwani. Does the AHL apply to non-cash benefits like car or housing allowance?
Yeah, I think the answer for that is if it goes through payroll, I don't see you getting away with it, because it will kind of be lumped up together with the this basic salary that the employee gets. So the 1.5 will actually apply to all of them.
Okay. John Kiri is asking, how do you remit housing levy for employees without PIN?
Well, that's a good question. How do you remit housing levy for employees without a PIN? And the assumption here is that as an employer, then you shouldn't, in the first instance, be paying your employees without taking that through the iTax platform, and of course, the employee also, by extension, having a PIN or a KRA registration. So where and this is quite in rare circumstances, you have an employee who doesn't have a tax registration, then I would encourage you to have a discussion with KRA so that they enable you to account for those taxes. Because what also you want to avoid is, as they always do, KRA come to do an audit, then they look at what you've been paying your employees, and if they find out that then there's a discrepancy in terms of what you're paying your employees vis-a-vis what they would have expected also for housing levy, then that will be an issue for asking for penalties and interest. So it's something you want to avoid. I'd rather you manage it proactively so that then you avoid the penalties that would come with this and you do that by engaging KRA quite in advance.
Okay. Clifford asks, what of where the interns or temp staff fall below the taxable threshold?
Well, and that's also a very good, very good, very good question in terms of what if they are below the threshold. So again, this is not something that has been clarified by the Kenya Revenue Authority. But again, I'd classify it in the same way you pay NSSF, NHIF, and these particular contributions, you don't make them because the employee has met the tax threshold. So you'll still be forced to make those contributions even when this person hasn't met the threshold for tax. But that's just my thinking. And I'm thinking that if KRA could clarify, that would also be better.
Lottie asks, do you apply housing levy on terminal benefits?
So the current wording of the Finance Act is anything that goes through payroll, because even for terminal benefits, you still pay tax. Yeah. So anything that goes through payroll then has to also be subjected to this 1.5%. The Act doesn't say that we will excuse you for, say, terminal benefits, or we will excuse you for monies that would go to a bonus. So the Act is quite silent on that, and I think it is by design as opposed to being by mistake, because the genesis of this is basically for the government to collect as much money as they can to finance the ambitious plan for building houses.
Susan asks, is the current Section 30A of ITA on affordable housing relief effective on the contributions to be effected?
Just read that again.
Is the current Section 30A of ITA on affordable housing relief effective on the contributions to be effected?
Well, that's not very clear, but the incentive for the affordable housing relief still continues, as that hasn't been taken away through Finance Act 2023.
Okay, Samuel asks, will bonus be liable to housing levy deduction?
Yeah, I think that's the question that has come up several times, even on this call. And my answer to that is, when you look at the way the Finance Act is worded, there's no kind of exception to put away bonuses and say these ones are not subject to housing levy. As it is, anything you process through your payroll will be subject to this housing levy of 1.5%.
Okay, John has clarified his question on the PIN issue. There is provision for remitting PAYE for employees without PIN. Last tab on P10, specifically expatriates whose PIN is taking time to process.
Yes, KRA will always facilitate employees who do not necessarily have a PIN, and there's a good reason for that. They will facilitate the employer to be able to account for those taxes.
Okay, and then the last question in this round, Alex, is from Stephen. Does the housing levy apply to non-residents?
Another good question there. So you're not excused if you're non-resident and you're accruing or deriving your employment income from Kenya. So the housing levy will still apply to you as a non-resident, meaning you just basically get less to your pockets.
Okay, that's it on the questions, Alex.
Okay, I think we're moving on very well, and just chatting here with David from KRA, who's joining us to show us how you then account for housing levy within the system. And more importantly is because today we are on the 7th of August, and 9th of August is soon approaching, especially for all of us who've been working with 9th of August to file our PAYE return for July. While the financer talks of 9 working days, what I understand is that we've been filing without necessarily looking at the working days per se. So that's the reason why we thought it would be very urgent to actually do this particular webinar together with KRA, for them to show us then how we account for housing levy on the system. So as we do that, I think we can get to another round of questions.
Sure. We've got one in from Susan. Do you deduct housing levy on secondary employees?
Maybe Susan could explain what she means by secondary employees. If you could enable her mic.
Okay, I'm just trying to find her in the chat quickly. Hey, Susan, you should be able to unmute.
Oh, hi, Alex. By secondary employees, I mean, for example, you have an employee who is employed by two entities, has by entity A and then by entity B, so pays PAYE on those two entities from the remunerations received.
Okay. Thanks for that question, Susan. So here we have two thoughts. So there are people who say that secondary employees are not subject to this particular housing levy. I know KRA hold a different view. And of course, as we speak, the system has been enabled. The minute you pay this particular, or you are accounting for payroll for this secondary employee, kind of the tab for housing levy also kind of picks some information from this other side for PAYE, but I'll let Carrie explain that. So what that does, and it makes it a little bit difficult for you then not to subject housing levy for these secondary employees. So this what is happening actually within the carries system, and I think they will explain just shortly. I see other questions, and I want us to take them at the very end. I think at this juncture, I would want to welcome David Busaule from the Kenya Revenue Authority. David will show us how to account for housing levy within iTax platform. And then after that, perhaps we'll have maybe a few round of questions as we get to the very end of this webinar. David, if you could hear me, you could take it up from here.
Good evening, everyone. I'm so sorry for joining late. I'm joining Nikoku Bundu's far away from the city, and our security team seems like have taken longer than expected to enable me join this webinar. Apologies for that. Am I audible, Alex?
Yes, we can hear you.
Could you allow me to share? I think I can share, but is it telling me to share the screen or? Okay. Let me just see. It allowed me to share. Okay. It's there. I'm not sure. Is the iTax page the one visible, Alex?
Yes, we can see it.
Anyway, again, apologies for. I know I don't want to be equated with government people. Don't take time. Alex can confirm I was joining just on time, but I think sorry about again that I think things beyond our control. My name is David Busaule from KRA. I work in the Business Transformation Office, an office which deals with automation of all domestic taxes processes, including the Recent Finance Act changes. We are not the enemies, though, in a light note, but I think it's just part of the job. You know, those things which you have to do, because if you don't do it again, your pay might not be there next month. So anyway, I think I'll take you through. Alex, I'm not sure. Have you covered some technical bits of the housing levy? Or probably
Yes.
just bring me to speed, probably what might have transpired.
Yes, we've covered the
introduction.
introduction.
Joining late due to those unavoidable.
We've covered the introduction bit about Finance Act, the housing levy as it were in the bill, and housing levy as it is in the act. So we're just going to how then it is implemented in the system, and then we'll have question and answer, some of which I think were asked, but we can go through them at the end.
Perfect. So I just proceed with the iTax bit, then we catch up at a Q&A later.
Yes, yes.
Okay. For employers, I think you guys log into iTax every time, so nothing new about it. So we just go directly to file return. Select pay as you earn. Why we select? Because housing levy is being paid through the pay return. So meaning anyone who needs to pay housing levy must have a pay return, and of course must be having employees, and he must be paying them as some wages or salaries. And I think we'll go into the quite some issues around these. And this housing levy is based in the Employments Act. So again, you realize in the Employments Act, not any of the acts KRA is currently enforcing. Probably in future, I believe probably some changes may be done again to the KRA Act if government deems necessary to do that. But for now, we've been appointed. I believe everyone saw the public notice by the state, by the cabinet secretary for housing, and specifically the State Department for Housing and Urban Development. I think appointing KRA, the Commissioner General of KRA, as the collector of housing levy. So KRA is only coming in to provide a portal. KRA is coming in to provide a portal for employers to file and pay. Sorry about that. I think someone is passing here with a very noisy. Sorry, I'm in Bundu, so people are. But anyway, I think okay. So that one I think has already happened, and again, KRA issued another public notice again. So I think the last week I think has been too heavy for employers and taxpayers because initially we came up with the iTax enhancements. Our internal circular was we are seeing it in WhatsApp groups, which is very weird because that was internal communication to internal staff. The classification of the document was actually internal, meaning it's only for KRA employees and staff, but someone shared with it and it has made rounds. And of course, now the Finance Act changes have been implemented in iTax beginning of this month. Then the State Department for Housing issued a public notice, of course, appointing KRA and clarifying 1 to 3 things. Then now we are at another public notice which KRA issued. And one thing I think I saw in that public notice, probably which was also an issue, was it will now be an allowable deduction. Okay, I was also surprised on that one, but anyway, good thing for you guys, I think, when you come to file the end of year returns. So I think we just move now to the pay return. I'll download the pay return exactly the way you guys do it, with no much. I think, Kanye, I'm sharing my screen, I believe. So I believe now you are seeing something like a P10. I'm trying to download it. Is that what is visible on the screen?
Yes.
So that okay. Oh, so I'm sharing the screen, not necessarily a specific window. Okay, that's fine. I think that's good. And what is visible now is the pay return, the Excel one.
Not the Excel one.
Okay. I don't know. Okay, is it loading or? Okay, I'm sharing a window. Okay, let me just probably. Let me stop maybe sharing and let me stop sharing. Just sharing in a while again. Just give me some time. I share. I needed to share. Oh, okay. I think I was sharing a window. So now, when I come, what about now? Is it the Excel now which is visible?
Yes, now the Excel is visible.
Good. So I think our dear employers again and guys who have joined the call, the webinar. So you joined, you've just logged into iTax and download the pay return as it is. Let me try get the PIN number. I try to log in because I want to take you through the end-to-end process of filing and payment, and probably address 1 or 2, 3 things on this one. Okay. So I'll just come and enter the PIN number. And then I'll come and select, of course, type of return is original. if you're filing an amended return, which probably seems like most of you, the very good employers in the economy, they pay way early, I think between 15th and basically, let's say by end of them, by 28th. Now that probably the Court of Appeal was, I think, giving the easy 28 or 29. So I think a good number of the big and the very good employers in the economy, they pay the employees way early. So it seems like you might be having to do some amendments now that the both public notices of the State Department and KRA, they were very clear on the effective date of this levy to be 1st July 2023. So anyway, for us, we'll go with the original return first, then probably address the issues of how to come and amend. I'm using, okay. I think let me just use these. I'll go and file maybe probably nil returns on the other side to bring it to July. So so we have 31/07/2023. So this is we're just using our July as a sample month for this. Okay. We come to the sheet. I think I'm not going to belabor much on this, but just allow me to capture one employee. You guys can import a CSV. For now, I think we can handle up to about 60,000 line items, the pay return. Probably only 2 employers are able to surpass that, maybe about 3, mostly in the public sector. The TSC, the DOD, and the Kenya Police, I think are the ones with numbers above 60,000. So they may have to update, they may have to zip different sets of 60,000 list of employees until maybe they do the full payroll. Okay, so I can select resident, non-resident. And I know KRA and the State Department are having a lot of discussions on some of these gray areas which are in, and more clarity, I believe, will be coming in due course, in addition to the public notices which were issued last month. But again, you realize now, when you go to the Employment Act, it only talks about an employee. It has never, it hasn't exempted a non-resident or a resident. It only talks about an employee, and an employee is earning a wage or a salary. And of course, now the housing levy comes to be the base of the housing levy now becomes 1.5% of the gross salary. And again, at that point, no exception, whether it's a resident, non-resident, primary and secondary. But I know people are holding different views, and I think we'll address it again in the Q&A. So let me just go with the happy path. These are resident and primary employee, but notwithstanding, again, non-residents, and we've not received probably communication to the contrary that non-residents and secondary employees are actually probably exempted from housing levy. So again, so we can have the we can have, so I just have probably zeros for that for now, and I want to take care of these. I'm using $1 million again because I just want you guys to know the pay rates have also gone up for the guys who are earning about 500,000 per month. Between 500,000 and 800,000, you're going to pay 32.5%. And then above 800,000, the bit which is above 800,000, you're going to pay 35%. So this return is properly aligned to that. Basically, all the pay return related changes of the Finance Act, we can comfortably say we were able to deliver them, and this time quite timely. So I think actual contribution, again, I think so many things are happening. Most of you probably were being deducted NHIF at 200. Now probably we may have to be deducted at 1080, having tier 1 and tier 2 over 360 and 720. But at least happy for us, KRA, as KRA already started deducting these, I think, way back, even when NSSF had been taken to court. I think KRA, as an employer, I've always seen it. KRA has always actually aspired to be a very law abiding. So we don't just collect taxes, but KRA is one of the most compliant taxpayers, not just on payroll taxes, but across board, because I think we believe in the statement, we believe in the adage that charity begins at home, actually. So we can't be going out to you guys when we are not compliant. So probably that is it. We come to the amount of insurance, housing levy, and I know the belts are being tightened up. Things are not really probably, as you can see, more deductions are coming and hitting the payslip. If you're having employees who are having a mortgage and the mortgage deduction or the mortgage repayment is being deducted from the payslip by the employer and being paid directly to the lender, you can consider giving them the mortgage relief through the payroll. Again, it's not illegal. It just reduces the amount of refunds at the end of the year when this employee, of course, he will now pay less pay, and when they come and claim the mortgage, their ITR return will balance without being in a refund. So you can do that for both employees whom you're deducting their mortgage repayment and you're the one paying directly to the lender. You can give them the relief. And also for the ones relating to insurance relief, any of the insurance reliefs, whether it is life, whether it's education, but of course for education it has to be more than 10 years, and whether it is health, including NHIF, please give your insurance premium relief to your employees, especially if by the fact that you're deducting the premium through the payslip and paying directly to the insurance company. Consider doing that. I think for now I can allow the NSSF, the NHIF one. I think it is about 1,700 for this person as per the old rates. The new rates have still not been implemented, so I'll allow them 255 as which is 15% off. I think 1,700. Then of course now we come to the payee. Maybe that is amount which is going to be paid. So yeah, you can. I think this sheet you guys are very comfortable with it. You've been doing with it. You deal with it on a monthly basis. Of course, sheet C again, you can consider capturing your persons with disability there. What the only difference is the system validates the exemption certificate to confirm that it's still valid for that month. So allow me to go to the business of the day. Of course, again, we are kind of exploring ways, if possible, that we can just even link the housing levy deduction to the sheet B and C, because seems like there is some form of a general consensus that the gross salary is the one still in sheet B and C, and the gross salary in this case is both cash and non-cash benefits. Again, we've not seen any exemption. Touching on exempting anyone relating to maybe non-cash benefits. So again, I think these are some of the issues. We hope more clarity will come in. Just a minute. Someone is just a minute. Just a minute. Just a minute. Just a minute. Sorry about that. Okay. So we just proceed with the return. So we go to sheet M1. Allow me to go to sheet M1. Rather sheet M, which is affordable housing relief. So the focus of today's training is there. Alex, I'm still audible. Please let me know. The network back here in Bundus is very bad.
No, we can hear you and we can see your screen.
I'm still audible?
Yes, you are.
Actually, I'm literally on top of a tree, just to get the best network. Anyway, so initially, and let me just give you some history about this sheet. This sheet has been with the pay return since sometime in 2019, because that is when the issue of the housing levy came in. But back then it was optional, and it was not mandatory, and it was more of a contribution. It was going to a fund. It was going to earn interest. So there, before the Finance Act 2023, that bit of the housing levy was already delivered in the pay return. The only probably reason why most employers did interact with it is because it was not mandatory. And the reason even why we had the member number or the ID number, because for you to register in Boma Yangu, you need an ID number. And the ID number is the registration number in Boma Yangu. So Boma Yangu being the portal for the Affordable Housing Fund, probably where you can go apply for a house, all those things were there in the Boma Yangu portal. So that's why we had the ID number. So the ID number became the unique identifier between KRA and Boma Yangu, because KRA has our unique identifier as a PIN. For them, it was the ID. So again, the reason why the ID was there. But again, for now, the way it has changed to be a tax, I'm not sure if probably we still need it, and there's a conversation within KRA to probably make this not mandatory now going forward. So again, those are some of the changes again, probably which will be coming even in the course of this month, where the version of the return, the current version of the return when you download probably for the next filing will not require the mandatory for now. So I think for now, I love just to capture something for the sake of then the member name. I'll just use my name again for the sake of this example. KRA PIN number. So again, so some of these details, I think you could still reuse the details in sheet B and C because you still need the name and the KRA PIN. Is only that this time the PIN is coming after the name. So I think in Excel you can easily do away with some of these things. Then the gross salary. The gross salary, for now at least, again, we are trying to see how we can make filing of this return a bit easier in a way which we can link this sheet to the sheet. But again, the reason why we've not made them mandatory again is because we did want to, because back then it was not mandatory. We do want to charge because someone may just want to do housing levy and not want to do payee, or vice versa. So, but where we're going probably with further direction, we may realize that more controls would be included in the payee return, probably to ensure either auto-calculate the housing levy based on some gross salary in sheet B and C, and probably then we may probably not need this sheet, or we may still need it, but in some modifications. So again, we are really engaging employers, and through such forums, the feedback we're getting, we're going back to the drawing board and trying to see how can we balance the government objective of collecting housing levy on one end and also make it easier for employers to comply. So for myself, I think for this example, it was $1 million. So that's the gross salary. Then the basic salary, I don't know why mine is still, when I've downloaded it from where, because it should actually allow me to, the basic salary, I believe the pay return which you guys are using now, the basic salary is grayed out. But anyway, if it's still not grayed out, that's still fine. But again, what has changed from the previous housing levy and the current one is the rate remained 1.5. It's only that it stopped being a contribution, it became a tax. And also on one end, we removed the capping. The original one had a capping of 2.5 for both employee and employer. This one, there is no capping, and you realize now the employee deducted 15,000, the employer matches 15,000, then the housing fund will receive 30,000 from this employer on behalf of this employee. But of course, with the KRA's public notice, we believe now the 15,000 employer contribution will qualify as an allowable deduction at the end of the when you're doing your accounts. Though that provision probably disappeared, and I think Alex will probably mention that again in the next session of Q&A. There was an express provision on that, but seems like it disappeared. But at least KRA has come to clarify that it will be an allowable deduction. So we come to tax due. So the tax due there, this is what we call the unified payroll return. Of course, the government objective currently is trying to consolidate all the labor-related contributions and deductions to one form of filing. And for now, we already have the housing levy, we already have the NITA levy. We hope probably to onboard NHIF and NSSF in this unified payroll return, so that again it can be a one-stop shop for declaring all both labor-related contributions and deductions for these relating to the payroll, or what the salaries and wages and emoluments employers are paying. So that is on the, so my pay is there. I'm only having one employee, pay is there. You can now come to, if you deducted pay from employees with no PIN, you can always use row 11 and probably capture some other pay. Maybe due to one reason or another, maybe it's a new foreigner, you are still finalizing on the work permit and probably already deducted the pay you earn, or maybe you're in the process of applying for a PIN, or a few days by the time you're filing, you didn't have the PIN number. You can always use this option as and when necessary. But of course, once they get a PIN, we're always encouraging to come and remove the pay deducted from employees without PIN under row 11, and you take it back to sheet B or C where applicable. Again, we have the housing levy. Mine is 30,000 because it's 15 for the employee and 15 for the employer. And the number of employees contributing housing levy, 1. Then now we come to the NITA levy. So the changes relating to NITA levy, we implemented them in April 2023. Of course, I believe everyone understands that the mandate for collection of NITA levy, the industrial training levy, came to KRA in April 2022. The amendments were done to the Industrial Training Act. For the NITA levy, something you need to maybe just note, even if not relating to the housing levy, which is the business of the day, but it's just good to comply because government is really pushing for, we call it one whole of government approach to compliance, and we want employers to comply with all related labor deductions and contributions and levies, and so that we just have a compliant employer and not one who is with KRA but is not compliant with NITA. So of course, for this one, for NITA, what we did is again, we were aware of the fact that some employers might be engaging employees probably whom they may not have get their PIN numbers, maybe some casual employees, part-time employees, and that's why for NITA, we allow you can edit the amount upwards. So as much as 1 is the number of employees from sheet B and C, you can move this to 100, from 1 to 100. And the NITA levy now will become 5,000 because NITA levy is at the rate of 50 shillings per employee per month. So again, for NITA levy, there's that flexibility. And I think as we continue to make certain changes relating to housing levy, I believe you'll start seeing some flexibilities even probably towards filing and payment of these. So I'll just validate the return because I probably believe we might have quite some answers to some queries to clarify, maybe in the Q&A together with the team from CDH. Okay. So error found in there is an ID. Okay. ID number. I'm being told to enter numeric value. Okay. I thought I've just entered the numeric value, but let me just go to that sheet. Only which numeric value have I entered? Okay. Oh, sorry. Okay. I think okay, I think now we're good to go. That becomes probably my ID. So it's important, if government continues to require that you capture the ID, please ensure you capture the correct ID, because maybe in one way or another, as much as it's a tax, probably government may still want to know how much each contributor in Boma Yangu contributed, and the only common identifier between us and Boma Yangu, which is the portal for affordable housing levy, is the ID. So again, but again, I think more direction will be given as we go forward. So I can validate the return and then go back to where I'd logged in. Kanye, I believe I'm back now to the iTax portal. Okay.
Yes, you are.
Okay, this employer, their return period is February for this test environment. Just allow me to do some quick nil returns. This is test environment, so don't say, hey, who is this employer who is being exempted from filing? No. I'm just using some test environment on our end. Okay. Let me just see if I can do some. I can bring it to, because I want to upload with the July end, July, or you can still upload actually. I can just probably change the return period for the sake of the training, so that probably we don't have a lot of time on this. Just allow me to maybe open another one. I don't know, it's taking forever. Let me just see file nil return again. I can still use just any sample month, but at least for you, probably much of these changes are coming in the to avoid. So allow me to go back to the return. At least you've understood probably the main concept, but just for the sake of uploading, I can go back to 01. But again, it will now. Back then, it might actually do the capping. Okay, let me just try see if I can get a pin. Let me try see if I can get a pin for August. Oh, there's actually file. Let me see if I can just file quickly to date. Because if I go back, it will apply housing levy how it was being applied before, where there was capping and other things. So I think let me just bring it to so that we can upload and probably go generate payments. I think that's okay now. Maybe I was just having some network. Just a minute. Okay. Where are we now? File return. Sorry about that again. I'm just bringing it to July so that we can upload the return. We've just worked on it. Now that some things have changed from 1st July going forward. So let me do for June. Okay. For June. Okay, let me now come upload. Let me come upload the return for July now, the one we've just validated. Okay, choose file. Okay, just come to, I believe that is the zip file under my documents. Agree to the terms, of course. These are not the time to read the terms, please. You can always read them later. Okay. So I'm just uploading, and that is it. Our return has uploaded. Let me just download the acknowledgement receipt for everyone again to just, we can probably go through it. So it's the same acknowledgement receipt. The only difference is, for you, as I believe, the housing levy probably should be somewhere. I'm not sure why this one is not showing, and maybe because it's a test environment one. But now, once you filed, you can actually click on payment. While you're on this page, you can click on payment, or you can go the long way of going to payment registration. So I think whichever works well for you. Okay, so you can click on payment. And of course, as much as the filing was joint between payee and housing levy together in the same return, even together with NITA, please note these are agency revenues which KRA is collecting. Both housing levy and the NITA levy, they are agency revenues which KRA is collecting on behalf of the respective principals. And for now, you'll just come and generate the PRN for payee only. So that's how you go about it. So please don't modify the payee amount to include housing levy, because housing levy and NITA levy are paid separately. Rather, they are paid through separate payment slips. So I'll come and generate the first payment slip for payee, which is already there. I'll come and submit. Okay, that is now the payment slip for payee. You can just download it to confirm. So this is the payment slip for payee. It's there. So it's only payee. So you go back and download the one for. So we go back and download one for housing levy, and even you can do for NITA levy, so that because all of them are basically mandatory deductions, labor related. One is a contribution by the employer, the NITA levy, but housing levy is both a deduction from the employee and of course a contribution from the employer. So I'll come to agency revenue. Let me start with housing levy. I'll come to agency revenue and select housing levy. Select the year. I think for us must be July. We expect to see some 30,000 if all is well. So again, please note, you cannot pay housing levy before filing the return. Please note that you cannot pay housing levy, you cannot pay NITA levy before filing the return. So you must first file the return, which has housing levy or NITA levy. Then now you go and generate a payment slip. For us, it's there. Good. It's there, 30,000. We proceed and generate another payment slip. So please note, a payment slip equals a payment instruction. If you're using RTGS, you cannot use one RTGS for 3 payment slips. So if you're using RTGS, you may have to do an RTGS for payee, for housing levy, for NITA levy. If you're using check, the same. If you're using EFT instructions, the same. However, and again, this housing levy, because KRA is the collector, you are paying it exactly the way you pay the other related taxes. If you pay at KCB, you just go and pay at the KCB KRA account. And the backend will be able to know this was payee, this was VAT, this was housing levy through the checks and the checks we've put back in the back end of the system to know the difference. So again, these are our payment slip for housing levies generated. Let me see how it looks like, or rather we can see how it looks like. So that is a payment slip for housing levy, and what differentiates by the payment slip is the code. Every payment has a unique code. You can realize for housing levy, the code is 0511. So when you go to the KRA collection account at KCB or Stanchart or a Corp or Equity or Gulf, you can always find that. Just using this code, you'll be able to know 100 million came under code 0511, and that is housing levy. Another 2 billion came through this code, and that is payee. The other, this code, and that is excise. So that's kind of how in the back end, even the various payments are separated. So this is the housing levy payment slip. You again, how you address your checks. Okay, I'm not sure because in our trainings of employers, we find different banks, different employers addressing checks differently. But again, at the end of the day, as long as the check will move money from your account to the KRA account and credit your ledger with the payment, then at least I guess then it works how you do it. So I think how you address your checks, probably just know you are not paying to the State Department. The check should be addressed to KRA because it's KRA which collects it, accounts for it, then now provides it to the State Department for Housing to proceed with its affordable housing program. So that's how the housing levy. Again, now that I mentioned on NITA, just allow me to show you again how to generate the one for NITA. So for NITA, again, you go to agency revenue, but now this time you don't select housing levy, you select NITA levy. And of course, so again, you come to agency revenue, select NITA levy. I think for us, ours was about 5,000, if I'm not wrong. So let's just select July 2023. Oh, there. So you realize there will be 3 separate payment slips, one for payee, one for NITA levy, one for housing levy. And the moment in future, again, when you onboard the other 2 remaining major statutory contributions and deductions like NSSF and NHIF, again, then you realize the payment slips again may be more. Of course, it's the desire of government to have probably a much more simplified payment system, and I know in future again as we continue this journey, will always make it easier, at least to see how. So these are the payment slip for NITA again. So please, you don't edit the pay amount in any way to include NITA levy or housing levy. All of them are being paid separately to about 40 agent banks. You can use M-Pesa, you can use a credit card, you can use debit cards. I think whichever mode of payment which is convenient to you. So these are how the NITA levy payment slip looks like. And then now you proceed and make payments. Now for housing levy and NITA levy, we don't have a unique ledger for all agency revenues. So the only way an employer confirms that their payment was actually properly received by the bank and credited to KRA, there are 2 ways. You'll receive an email from iTax confirming that your payment done on this date has been received by KRA, and of course, you'll be able to know that payment was relating to housing levy or NITA levy. So for the agency revenues, you can rely on the email confirmation from iTax, or you can always come to payments menu, and under the payments menu, you can come to consult payments, and you can always query the PRN. So maybe let me just query the PRNs which were generated today, and you can query and know the status of the PRN. So we have 0708 2023. consult. And when you consult, you'll be able to see the PRNs. So you realize for myself, I've generated 3 different PRNs today, one for pay, one for housing levy, one for NITA levy. When you make pay payments, you'll be able to see it in the ledger because pay has a ledger in iTax. But all the other agency revenues, they don't have a ledger in iTax. So the only way is to come and consult payments. And if this status has moved from registered to received, then it also means that KRA is in receipt of your funds. So you can either wait for the email confirmation, or you can always come and consult and also confirm that the status of this PRN is now received and not registered. And I think that was a quick walkthrough through the how to account, how to file for housing levy, and probably how to account for it and how to make payments. Probably I hope it has probably bring slightly much more clarity from where you are. In addition to you guys being copy of our internal communication, hey, I think going forward will be issues about the word. Our staff have confirmed they can share a whole document, which is an internal document. Will be more cautious with the words we use because it may just be a public document again at the same time. Anyway, I think I'll stop sharing and probably back to you, Alex, and the team. Maybe as we move to the next Q&A. Thank you very much. Okay.
Thank you, David. And I think you delivered what exactly we wanted to know in terms of how this, I think for now people are calling it an animal, how it looks like within iTax. And basically the point here is to help all of us then to comply as required. So we have seen a couple of questions come through. Teresa, if you don't mind, please, you could read the questions so that together with David, we could respond to those questions. And just before you read, maybe I just took down 3 of them, and you could check if we have some others. One, David, people asking is, how do you account for housing levy for employees who do not have a PIN?
Okay. For now, the way we, and I think that's why even I try to explain the one for NITA. For now, any employee whom you are deducting housing levy must have a PIN number, either a PIN from using a national ID or a PIN using an alien ID or a PIN using a passport. That is because the return, the system is only reading what is in the return, and one of the mandatory fields is the ID and the PIN. So I think even going forward again, we want to see if is it a conversation that we can say PIN is not mandatory for housing levy, but now at least we need to have one mandatory unique identifier. Either PIN becomes the unique identifier or probably the ID number. So I think again it's something we can pick it up as my office and just see and probably sit down with the State Department and see, are you more interested about the money or the contributors? I think that now needs to come out clearly. And if they are really interested about the money and not the listing, in fact, even you can do away with the listing and we just find a way of calculating the housing levy probably based on the gross salaries on sheet B and C, and probably now add it up on the computation. Okay.
The other question I see on my end is, are secondary employees required to account for the housing levy?
Yeah, that's a hot potato. I don't know, Alex, what you told them before I joined, but
I told them we wait for David
honestly,
to clarify.
Honestly, me where I sit, there is no exemption which says secondary employees cannot. And as much as I want to be empathetic, and really these are some of the issues KRA is actually pushing to have. There is some working groups which are being formed between KRA and the State Department, and I think there will be much more clarity now because these are some of the main issues which are on the table about secondary employees, about bonuses, about terminal benefits. At least terminal benefits probably when you go to the definition of a salary or whatever, at least maybe it excludes that. But now the issues of other things which are coming up, we really need, because again, it is not an act which is within the mandate of KRA. So KRA, we don't have the mandate to probably give the overall interpretation. So it's more of we need to sit together to have a government, more of a government consensus on some of these things. So yes, for now, for me personally, I've not seen any indication or unless now it comes to the contrary that any employee, whether non-resident or secondary, is being exempted from housing relief. Okay.
And maybe connected to it,
Or
David,
rather,
as
not
it
housing
is.
relief, but the housing levy. Okay.
Okay. As it is on the ITAX system, is the tab for housing levy then connected? I think you mentioned it's not connected. So for secondary employees, will the amount for housing levy be automatically picked, or you have to go in there and put out those amounts for secondary employees?
No, for now, actually, we've not linked. We probably will do it in the near future, but we've not linked sheet B, C, and the sheet F for housing levy. So depending on the interpretation of the employer, and again, we are in a self-assessment regime. If in the contrary, maybe if there is no direct communication by either the State Department for Housing or KRA on to the contrary of what you're doing, then at least you still have that window. I think when the way we've done for NITA levy, then that one already, KRA has already communicated that NITA levy is applicable to both resident and residents, secondary and primary. So because we auto-calculate, but for housing levy, we've not put such checks for now. But I can't say they'll not come. So
Okay.
it's just, I think, something which probably will get more clarity even in the course of the month as you go by.
Thanks for that. Connected to secondary employees is people who pay installment tax. Would they be also expected to account for housing levy?
Now, the basis of housing levy and even where it has been anchored in the Employment Act and the Employment Act, it's more of a tax. The basis is on gross salary, and again, it is a salary where you are being paid by someone where you are deducted the 1.5% and your employer matches it. So anyone else who is not in the pay regime, then it becomes very hard to account for housing levy. Though I think I've been pushing everyone should pay it. Okay, maybe I should. I think I'm of the opinion that even self-employed people, we need to find legislation for them to pay, because if everyone is paying, even the self-employed, if you're self-employed, when you come to file your ITR, we will need to find you at that point. You might avoid being employed and earning a salary, but we need to find you at the end of the year. But anyway, for now, such employees are not within the, I think, the coverage of housing levy.
Okay. When you were explaining, you mentioned something around terminal dues, and it is one of the questions that had come up before you joined. So that is excluded from housing levy.
Yeah, I think when you go to the definition of, I wish we could have referred, when you go to the definition of in the Employment Act, do you have it? It is, I think it's something which we can confirm, because on the definition of, because the whole basis of the housing levy is anchored in the Employment Act. How an employee is defined is in the Employment Act. Who is an employee is the Employment Act. And even the aspect of salary, gross salary, is also in the Employment Act. And the last time I think I checked, there is some, when you go to the definition of is it basic salary? I've seen people, it seems like you can't get a direct definition of what gross salary is, but that act has defined what basic salary is, and it has said it is gross salary less
Allowances.
and allowances, and I think terminal. But now this issue of terminal benefits, I think again it's something we are pushing with the State Department to just see that it is coming out very clearly. The terminal benefits, like the ones where you've earned, like maybe it's on contract basis and maybe it has provided for compensation or not, it should come out clearly that, and probably whether it is exempt or not. And I think again those are some of the things we are pushing with the State Department on issue of terminal benefits relating to employment. Okay. At least for pension I believe is way outside the even pension is under withholding and it's not under payee completely, and I think maybe that's something different. But I think for these ones which come through gratuity, severance pay, and these other lump sum payments relating to contracts, I think we also probably just need an express provision. And I hope guidelines probably will be coming soon to just give clarity to some of these. They look simple things, but now when people get into a room, they don't get to have a consensus on that. Okay.
Final one on my end, and then perhaps Teresa could read the other questions. And this is also another one that had been asked before you joined, is on gross salary. And you rightly pointed out the definition of basic salary within the Employment Act. So there's currently a confusion within the market to check, do we apply housing levy on cash and non-cash benefits? If, for example, I pay telephone allowance, I pay a bonus to this particular employee. So will the 1.5% apply on the whole amount?
Yeah, it's an interesting conversation, and even I may even wish to flip again the same conversation and even ask employers, on which basis do you use to calculate NHIF? Because again, even NHIF is based on gross. NHIF is based on some gross. So is your gross salary inclusive of cash and non-cash? I think there has to be even some. We need to have some way of having a consistent interpretation of what gross salary is. Because if for NHIF, actually the gross salary is inclusive of benefits, cash, non-cash, telephone, wherever, housing, then I think it may be very weird to have that gross salary as the definition on the side of NHIF and still have a separate gross salary for the sake of housing levy. And I think again, it's just something which both State Department and KRA also probably just again need to come out very, because where we stand, where I personally where I stand today with all the conversations around this so far, the gross salary includes both cash and non-cash benefits for the sake of housing levy. Because again, Kanye, again, I think government is avoiding this aspect, and I know where probably the State Department is coming. It becomes very dangerous to say it's on cash emoluments. But then what if employees decide now to change their remuneration and they say, don't pay me a very high salary, but start providing a better house? Or as in, it can start bringing some issues in the employment cycle, and it is important, I think, because when you start bringing that gross salary is probably only on cash emoluments, then it can actually change some of the things, how people are being paid, some of the emoluments, and that's why so far I haven't seen any exception that housing levy should not be taxed on both cash benefits. Okay. Okay, Kanye, we can't hear you. Are you muted? I can now.
Oh, sorry. Yeah.
Okay.
Yeah, Teresa, yeah. So I think we have some questions on the chat. Maybe you could read them out for David and I.
Yes, we have a few. Kennedy Juma would like to know, kindly clarify, is AHL applicable on gratuity?
Yeah, I think so. Believe me, those are some of the things we really want to, anything to do with terminal benefits, whether it's gratuity, severance pay, whether it's the payment relating to contracts, maybe whether the contract provided for compensation or not. I think all those scenarios we really need to, and of course, again, add those one-off bonuses. I think we really need to have, as we speak today, again, not much clarity on that. And we really apologize that this law is already in effect with a lot of gray areas. But I think I am hoping the engagements KRA is having with the State Department in the course of August, I believe we'll have much more clarity. By the time you close your August payroll, I think some of these things will already be very clear through one forum or another, whether it will be a
Sorry, David, we lost you there momentarily.
notice whether we are really pushing for that information so that
David, can you hear me? You're on mute.
okay. Oh, I don't know how it muted, because I think even I was nowhere around the. Anyway, sorry about that. I was saying again, I think it's upon employers. I think it's upon all of us to just go to the Employment Act and really come up with this real definition of what gross salary is, which is the basis of housing levy. Because if the Employment Act exempts gross salary, it deduces or expressly says that gross salary does not include terminal benefits, then I think then that it should also apply to affordable housing, because all the definitions are touching on affordable housing levy. They are all in the Employment Act. There is nothing in the Tax Procedures Act or the Income Tax Act. So I think it's the likes of Kanye to help us keep interpreting that definition exactly what it really means. And I think when we are probably having this discussion with the public, I think again it would be good to have the likes of such firms like CDH and the likes to just be in the forum to help give different perspectives on that. So for me, I think I push it back to employers. It's you to define, it's you to go and interpret what a gross salary is. And if it doesn't include terminal benefits in the Employment Act, then probably that one is not also affordable, is not applicable to affordable housing, because it will be very issues for affordable housing to put its basis on gross salary, which is already defined probably expressly or impliedly in the Employment Act, and probably there's some exceptions to what a gross salary is, and now probably then that becomes and still that is the same basis which affordable housing levy is pegged on. Okay, so I think we're really pushing for much more clarity, and a lot of these we've received a lot of these issues on terminal benefits and residents, and I think it's just a matter of time before we get clear answers, which both the State Department and KRA are having concurrence. Then I think they can now be shared with the public. Okay.
Thanks, David. The next question is, did you say that affordable housing levy is allowable deduction?
It's an allowable deduction for employers. I think it was in the public notice. I hope everyone is in copy of the public notice, which was sent on Friday. Is it Friday or Thursday? Friday. I've been. Let me just check. I think it was Friday or Thursday, one of them. And let me just. Yes, in that.
David, yes, we shared that. We shared that notice with the members when we were starting.
One for KRA, the KRA one.
No, the KRA one, I think you even said it wasn't public, so I haven't shared that one, though I have it.
No. This one is we issued a public notice on. We issued a public notice. When was it? Is it Thursday or Friday? KRA issued another public notice.
I've seen that one as well.
Yes, and it expressly, mentioned the aspect of. Let me just read it. There's a statement there. Please note that the employer's contribution to the affordable housing levy is an allowable deduction under Section 15 of the Income Tax Act. So it is on the employer side. It is not for the employee. I think it's just good to have that clarity.
Okay, Samuel Maura, specifically for you, David. Why do we need ID and PIN for the same person under Section M? KRA already used my ID to get me a PIN.
Yeah, I know, and some of these requirements in the pay return were there from 2019. Of course, the challenge we have as KRA, especially on this aspect relating to agency revenue, is especially back then that it was not mandatory, so it was still possible. It was back then when it was a contribution, ID was the unique identifier, and this information KRA gets was supposed to feed into the Boma Yangu portal for the contributors. And I think again, this is a conversation even you're having with the State Department, and probably the course of this month again you'll be seeing some changes on that. Either the ID to stop being mandatory, and but we still need a unique identifier of this person because names are not good enough. So we still need a unique identifier either as the PIN, and if it's the PIN, then even we are trying to see, can we do it in a better way and probably map it to sheet B and C. So it's a conversation KRA is having to just make it easier for employers. Okay.
This next one is a bit of a long one, David, so please bear with me. I'll try and read as quickly as possible.
Okay.
I uploaded
Okay.
the pay. I uploaded the pay file, but the return didn't pick the housing levy amount. I then filed amended return, which still didn't pick housing levy. Upon visiting KRA office in the afternoon, only to be told that there's a technical issue. Has anyone come across this today? When I go to view the filed return, the housing levy is there. But when I go to generate the housing levy payment slip, it gives error that you haven't filed the return. I'm afraid I have already used the amend option. How will I pay housing levy?
Okay. If really that challenge is persisting, it will be probably very random, and I'm very sure most, even in this call, maybe you can ask if anyone has the same challenge, because the same way I've just gone through, you can file and go and generate. It's supposed to be that simple with no complications. But what we've realized, which we're also trying to correct slightly, there is this issue when you go and let's say when I go and file an original return which has housing levy of 100,000, and I generate the payment slip of the 100,000, and then I come and file but not pay. I just generated the payment slip of 100,000. Then I come and file an amended return, and probably my liability moves from 100,000 to 50,000. What we've seen is the system will only pre-populate the incremental liability, which is 50,000, because already the first PRN was 100,000, so it will only show you what is supposed to be the second PRN, even if you've not made payments. Of course, compared to other taxes, the whole 150,000 will be the one which is showing outstanding, because at this point the employer has not made any payments. But again, if you just go with the original PRN of 100,000 and you generate the one for 50, so even for this case, I really need to confirm if one of their accountants or someone has already generated, or even someone from KRA, maybe when they reached out, already generated a payment slip for them, and they are just in the system. So they can and probably just confirm if any payment slips have been generated this month, and see if they can see both the one for the original return and the one for the amended. In case the issue persists, let them share with me the PIN number so that I can use it for further analysis. So they can share with you, Teresa, if they don't mind, and or Alex, and then you guys can, or they can even post in the chat and I can pick it, and maybe I can give you guys a response to get back to them on probably what I'll have found out. Okay.
Yeah, that would be useful. Teresa, let's get to maybe the last 2 questions if possible.
I actually have just one last one. It says, "Hi David, what is the new tax rate for secondary employees?"
Okay. The new tax rate for secondary employees is 35%. Anyway, but the whole principle of the pay return and secondary employees is the secondary employee has always, the tax rate for the secondary employee has been stopped from claiming relief, because you can only claim relief once. And also, secondly, they have always been taxed at the highest prevailing tax band. So for salary employees, that return since iTax came on board. So the only thing which has been changing are the rates. And even during Corona and the COVID era, when the highest tax band was being taxed at 25%, even secondary employees were being taxed at 25%. So it has always been going with. Of course, it brings some aspect of unfairness to some people who have not hit 800,000. But again, also for the ones who have hit 800,000, let's say they are maybe I can give an example, like maybe the PSLs and the people who sit in different boards in different probably government agencies. You realize for them it makes sense for them to be taxed at 35%. But again, we are in the era of self-assessment. What you've done with the pay return, by the way, is, and this is I think important for every employer, we are in the era of self-assessment. What we've done is we auto-calculate the payee under sheet, is it AH, under sheet B, but we still allow you to come and capture your own self-assessed payee under sheet AI. So again, at least we've not necessarily said that sheet AH and sheet AI should be one and the same. Ideally, you should have the same values if we are doing the right thing as best by what KRA interprets what should be taxable and to what extent. But again, I think on certain instances, it is now the employer probably now to make a decision on how they want to go about it. But for the rate which is in the pay return, it's 35%. But does the system force you to pay the 35? No, we have a window for self-assessed pay. But of course, the challenge comes in under Section 37 because the worst thing with Section 37 for employers is Section 37 says if someone is paid the employment income, it is deemed that the payee was deducted, rather the liability of deduction for payee is on the employer. So meaning on all instances of underpayment of pay as you earn, it's still the employer who will kind of have the full liability, because Section 37 has made it very clear that anyone who is being paid employment income, the pay is deemed to have been deducted and paid to KRA, so there is no liability to the employee. So in aspects of under declaration, probably then it may bring. But again, I think yes. Also the issue of secondary employees, we actually also within now KRA now that the rate is quite high. I also believe probably there will be some. We're also trying to see if there could be some further direction on just what is this. What should be the tax rate? Should it be fixed? Should an employer be allowed to probably use different rates? I think probably it's one of those issues. I think we're also pushing our policy team to just see if there is a way which more clarity can be given on the same. But again, as an employer, you realize you may never know, because it may never even be about the amount. David might only earn 50,000, but David, I'm a board member in 5 different companies, and all these companies are paying me 200,000 of director fees every month. So you realize I'm already in the 1 million. So in one company, I may be at 200,000. So I think this visibility that a certain employer does not know on what the employee earns from other sources, I think is the one which makes it easier to just apply the 35%, which might be, I agree, it might be slightly painful, but again, that is just what it is. It is okay.
Okay, so David, I'm projecting the public notice
Yes,
from KRA. Is this what you're talking about?
Very good. Yes.
Yeah, so clearly here we can see that the employer's contribution to affordable housing levy is an allowable deduction under Section 15 of the Income Tax Act. And I think that clarification was came in handy, because it is one of the areas that we were not too sure with the wording that we have within the Finance Act 2023. And maybe the other question, David, as we wrap this up, there are people who say they were doing PAYE returns by the 9th day of the following month, and that could be different from the 9th working day of the following month. What is your comment on that?
Yeah. You know, I think some of these legislations, but I think there was so much. I think there was so much back and forth on housing levy, and probably then some things, probably some level of keenness could have, maybe some oversight could have happened, because we expected it to just be 9 working days, not to 9 working days, but 9 days after. Yeah. Because most of the other labor-related contributions and deductions, apart from NITA levy, which is 5th, but it's supposed to also be moved to 9th. For NHIF and NSSF, it's 9th. For PAYE, it's 9th. So we expected, because it is a labor-related deduction and contribution, both, then it should still be 9th. Now the main issue then will be, yes, housing levy until the law changes, 9 working days means this weekend, which we just said, was it yesterday and the other day, we don't count it. So we start counting 31st, then we continued for today, and we have to go up to, so it will actually come, I think, next week. Is it next week? Probably after, I think next week actually will be there with the due date of, but I think our appeal to employers is, because you can only declare housing levy through the pay return. It is important and imperative that you file the pay return with both housing levy, NITA levy, and a payee. Of course, for NITA levy, you pay it by 5th. For pay, you pay it by 9th. For housing levy, you can pay it by end of the 9 working days, because again, we cannot change the due date, as much as it was an oversight, but we just interpret the due date exactly the way it says. And the same thing like the 5 working days for the withholding taxes. So I think it's the same thing. 5 working days If it's a working day, it's a working day. If the CS Interior comes and puts in some 2 holidays in this week, again, our working days keep on going further. So I think for now, we encourage them to file by 9th, or rather probably by 5th. Mostly, actually, we encourage employers now we encourage most employers to file the pay return by 5th, pay NITA levy by 5th, because the due date for NITA levy is 5th as we speak today. Pay by 9th, and pay housing levy probably. We're encouraging, you can pay it by 9th, but anyway, we can't force you to pay it by 9th, but we're also encouraging, if you can pay by 9th, both pay and housing levy, even if the act as it's worded currently, it's talk about 9 working days. Okay.
So the way I interpret it then is that you still do your PAYE return by the 9th day of the following month. Then you, like you've shown us, you generate the PRNs. Then you could choose at that point whether you pay all of them at the same time, or you could say for housing levy, I want to wait until the 9th working day. Is that correct?
Yeah, that's correct. There is, I know, yes, that is correct, because in the strict interpretation of the 9 working days, that is what it means. So we can't say the due date is, and even the State Department, the public notice by the State Department for Housing also quoted the 9 working days, and I think also the KRA one quoted the 9 working days. So as much as we'll have wished to drop working and just remain with 9 days, we can't do it because the law is very clear, even if it was an oversight probably. Okay.
Okay. I think there was just one more question from Julie. I don't know if you're able to type it out. And as you do that, maybe you could be having closing remarks from you, David.
Okay. I think for now, I think just and again, apologies for having those technical challenges, which I was not allowed. I was not given security clearance to join this link. I think government has been hacked, so hey, we are at a high alert probably. And so for me, I think just to encourage all employers who have joined, and I believe probably some clarity here and there has come, but there should be more clarity coming from KRA and State Department, whether it's through associations, whether it's through different engagements with different employers, whether it's FKE, whether it's KEPSA, whether it is different, I think, formations. We should have more clarity in the course of the month, or especially on some issues which are still a bit gray, and KRA is engaging the State Department for that, because we are the ones getting much of the is it the hit on is it this, and then of course now we're at that point where our policy team cannot unilaterally interpret it as to what they deem fit, and now we really need to have consensus between ourselves and State Department before we give out some clarity on some matters. So for me, I think we keep stay in touch with the different teams, and stay in touch for any new information. And I believe Kanye and team will also be able to share with all of you as and when new information comes in relating to clarify things relating to housing levy. Okay.
And there's someone here who's saying we didn't respond to her question on filing the levy for expatriates without a PIN. I think you mentioned that right now the system is not able to take care of anyone without a PIN. But in the meantime, what do they do? Because they are deducting money from these expatriates, I want to presume. David?
David, you're on mute, I'm afraid.
I think the best thing they can do is for this one, in the absence of KRA, because I'm not sure, in the absence of, is either they share with us, we give the expatriate the PIN, because again, unless, of course, I know where they're coming from, we can only give an expatriate a PIN on account of a special pass or a work permit. Those are the main documents in addition to the passport and the letter of introduction from the employer. So if there are delays in getting that, for pay, at least we've allowed you to have pay deducted from employees with no PIN. For now, I can't see anyhow you can pay the housing levy through KRA, but maybe it may be something which they can share their details with you guys, and then once I get clarity from the State Department, we can let them know how to go about it. In addition, and of course, I guess with that, I think as a KRA also, then we may probably need to relax some of the rules. Either you capture either PIN or probably ID to be one of the identifiers, so that if you don't have a PIN, you can use the ID, which probably may include the passport number of the expatriate. I think we need to probably see the ways of what are the mandatory fields in that sheet.
Thanks, David. The last one, because we just have a minute to close this. For those under withholding tax, someone is asking if they are remitting the 5%, what is the current final tax? Is it 30 or 35%?
Okay, by final, I think by final it depends, because these rates 2023 is going to be a unique year like 2020. The ITR for 2023 is going to have a hybrid of two rates, one up to June, and again July to the July to December will now accommodate up to the 35%. But if your income for sure is going to be below 6 million, then for you, in fact, you're not going to be affected by the new changes, because the new changes only affect people whose income will be above 6 million, and especially 6 million in the year, and especially 6 million for the one, especially if some amount of the 6 million is coming after 1st July 2023. So I think there is no fixed rate for anyone with withholding. It all depends on which band will you be at the end of the year, and then of course the return will now apply the rates accordingly. Okay.
All right. Thanks, David, for your time today. I think you provided a lot of information that we didn't know, and answered a lot of questions that we were looking for answers. We appreciate that this is work in progress even for the Kenya Revenue Authority, and some clarifications will come even as we continue with the enforcement of this particular housing levy. We just hope that those clarifications will come out sooner than later, because the penalty for not accounting for housing levy the proper way is quite punitive, and what we're advising taxpayers is to do the much they can to avoid such penalties, and also remain compliant as taxpayers. And to all of us participants who attended today's session, this is to thank you for sparing some time. We know this, we did this quite in a hurry together with David, and we did this because there's that debate of 9th of August, which is just 2 days away from today, vis-a-vis 9 working days, and a lot of you are already filing your PAYE returns and are asking questions how to account for housing levy. And so we thought this would be very useful to just come at an advanced stage to provide clarity to some of the questions that you have. As Teresa has promised, we will share this recording with you, so that even as we continue, able to refer to this. And in case you have any queries, please feel free to reach out to us. Our law firm is Cliff Decker Hoffmeyer, and we are based at Merchant Square on Riverside Drive. And those are my contacts for anyone who would want to reach out to me. So thank you very much, and looking forward to having more debates and more discussions on tax matters, together with the KRA, together with industry players, and anyone else who cares about tax. Have a good evening and goodbye.
Okay, goodbye.
Thank you, everybody.